for joining us for this webinar on the Paycheck Protection Program. These are some critical updates from our speakers today. My name is Carissa Miller. I'm the Program and Communication Specialist for Montgomery County Medical Society. I do have a few housekeeping items before we begin today. We have muted all participants at the beginning of this call for sound quality purposes. So if at any point you want to ask a question, go ahead and unmute yourself by pressing *6. We do welcome your questions, although we would like to hold them for the end of the program. So the order that we'll take questions in is we'll do all the pre-submitted ones first, followed by those entered via the chat box, and then finally folks who'd like to unmute themselves. Today's program will provide an update on PPP loan requirements that have been changed yet again. We'll take a look at those rule changes and also a case study on the forgiveness aspect of the program. This session will also offer updates on the HHS Stimulus tranches of practice funds, PPP Flexibility Act and changes to the requirements, covered periods extension, terms of loans, loan forgiveness calculations and timeframes, and other HHS stimulus money updates. This is our second webinar in this series where we'll be joined by Fred Landy and Maureen McCarthy of the accounting consulting firm of Katz Abosch. So I'd just like to say thank you to Fred and Maureen for being here today, and I will go ahead and pass the session over to you.
I apologize, I'm trying to get my slides up. There we go. Okay, thank you so much for having us today. I know that everybody's probably trying to get ready for the 4th of July weekend, and so I really appreciate you joining us today for what I think is a very important seminar about updates to all of the funding that has been available for small businesses, including medical practices. So my goal today is to go through the stimulus money, the 3 tranches, talk about updates, talk about various characteristics of each one, and also obviously at the end be available for any questions that you might have. And my partner Fred is going to talk about the PPP loan forgiveness program, which is something I'm sure you all are staying awake at night thinking about. So the first tranche of money back in probably early April, late March, was the $30 billion of HHS money that was came through the CARES Act, and it was slated for healthcare providers, and that included hospitals, and that included any physician group that participated with Medicare. And it really was only available to providers and hospitals that did participate with Medicare. What they did was, and it was an automatic distribution that you kind of just saw show up in your account, which was a lovely surprise. But what they did was they went back and they looked at claims for participating providers, and they paid out to each group or hospital about a month's worth of revenue. And like I said, it was only distributed to Medicare providers. It was based on payments in 2018. At this time, all of that money has been distributed. So there's, you can't go and apply for that now or request as to why you didn't get any funds. So then the second tranche came along, and there was a big uprising about why certain doctors didn't get any money for that, because everyone at that point, if you remember, was really struggling. So the second tranche came out. That was $20 billion. And the way that they distributed that one was either based on cost report data, which is usually filed by hospitals to Medicare on a quarterly basis, cost survey report data. So hospitals automatically got their money. Any other organization, like a federally qualified health clinic, would have gotten some of that because they also file cost reports, but other providers had to actually submit their information. And it was a pretty easy submission. It was based on what was your gross revenue, what was your lost income for March and April. It asked for your NPI, it asked for your Medicare provider number, et cetera. And then that money was distributed based on those applications. Now, the deadline to apply for that was June 3rd, so quite a while ago, almost a month ago. And so if you haven't gotten your money yet, you should check if you applied, but there are no new submissions available. So those are kind of two funds that have come and gone and hopefully helped the practices keep going during COVID. It really was money for practices for lost revenue and also to keep up with COVID costs for different sterilization and sanitation things that you had to buy for your office and the extra cleaning and whatever. So make sure you keep track of how you spent that money. They can audit. I don't know if they're going to, but I did hear that there was quite a bit of money set aside for audits. So I think that it's very important that you keep a spreadsheet of how you spent that money. So after this first and second tranche, our phones rang off the hook, and it was from our pediatricians and our OBGYNs and our pediatric specialists who don't participate with Medicare because that's not the population that they deal with. So they were very distressed that they didn't receive any of the stimulus money. So this third tranche is really developed to assist those practices that didn't get any money from the first or second tranche. So that was a $15 billion fund, and it was the payment is based on about 2% of your reported gross revenue from patient care. So you had to submit your gross revenue, you had to submit lost revenue, very similar to the second tranche. The deadline to apply for this money is July 20th. So if you haven't applied and you didn't get any money from the first two tranches, important to put that on your radar and right after the holiday and get on that. So one thing that came up that was interesting was some of our providers called us and said, you know, we got $3,000, $6,000 from the second tranche, nothing from the first, and a little bit from the second or vice versa. So they were saying that this third tranche would have actually given them a lot more money. So one of the things that we checked into was, what if you only got a few $1,000s in the first and second, and you wanted to really apply for the third tranche because that was going to benefit you a lot more. So under the frequently asked questions for the stimulus funds, there was a question about what can I do if I already attested and accepted the Provider Relief Fund money, knowing that I will get more on the third tranche. And they have a system that you can call in and you can apply to return that money that you got, and then you can reapply for the third one. Important to do that quickly because obviously the application date is July 20th, and that'll be coming up very shortly here. I've given you the website for all of that information that you would need. Okay, so there was another one that was an advance payment from Medicare, and I'll just cover this one quickly because it was cut off on April 26th. But many practices who did a lot of Medicare could apply for an advance payment. And basically what that is they gave you an advance, another month or so of your average monthly payments from Medicare. And they gave that to you as an advance. And what that means is that you got the money now, but you had to pay it back. So this is truly a loan, whereas the other three are not loans. It's free money if you can keep proper records of how you spent it. So once they saw that these tranches of money were coming out and it was really going to help practices, they stopped doing this one. So if you got that money, the recoupment starts 120 days after the date you got the payment. So you may be coming up on that soon. After the 120 days, they can start recouping the money from your future Medicare claims. So any Medicare claims that you have in say July, August, they're going to start withholding that money from your claims to pay this back. You have 210 days. They have 210 days to do that. If you get to the end of 210 days and you still owe money, that money that they're going to request that money from you. The hospitals have 365 days, and so keep an eye on that if you were able to get that advance. Again, it's a loan. Talk to your accountant about that. Talk to them about how you're going to book that. It really needs to be a loan, and it needs to be worked down as they withhold payments. So this is just a handy little grid as our summary slide, which kind of maps out the 4 different funds that I talked about, whether they are taxable income. Obviously, the first 3 are taxable income. You will pick those up in your income for 2020. The advance is not, because that is a loan, and so that will sit on your balance sheet until that gets paid off. So that's a nice summary of those funds. And now I am going to turn this over to Fred, who's going to go into the PPP and the loan forgiveness and all of those different requirements that have been published recently.
Okay.
I'm going to turn off my screen share.
Yep.
And you can take over, Fred.
All right. Thank you, Maureen. Let's see what we can do here. All right. I'm going to blow through Maureen's slides here. There we go. All right. Thank you, Maureen. And good afternoon, everybody. Thank you all for being a part of our webinar this afternoon. I'm going to talk about the Paycheck Protection Program and the PPP Flexibility Act and the changes to the PPP program resulting from the Flexibility Act. Breaking news, if there's anybody in the audience that has not applied for a PPP loan but would like to, yesterday was scheduled to be the last day for SBA to accept PPP loan applications, but late last night the Senate passed a bill that extended the PPP loan application deadline by 5 weeks through August 8th, and that is expected to pass the House, and it is expected to be signed by the President. So if you haven't gotten a PPP loan, you now have 5 more weeks to submit your application. Okay, or you will as soon as the President signs it. All right, so let's talk about the Flexibility Act. The Flexibility Act was signed into law on June the 5th, and it made several key changes to the Paycheck Protection Program. One of which is for anybody that winds up with an unforgiven loan balance at the end of their covered loan period, the loan payback period was 2 years. It's now 5 years. But an important distinction is that for anybody that got their loan prior to the Flexibility Act, so prior to June 5th, those loans remain at 2 years. However, you can negotiate with your bank to extend them to 5 years. It's not automatic. Any new loans after June 5th, the 5-year term is automatic. But as we're going to see in the next half hour or so, the goal really is to not have any unforgiven loan balance. The goal is to spend all the PPP funds and have total forgiveness. And one way that the government is making it easier to do that is they extended the covered period of the loan from 8 weeks to 24 weeks. So remember, you applied for a PPP loan, you based your loan amount on 2.5 months worth of payroll, right? 10 weeks. And then they gave you 8 weeks to spend it. But they also let you spend it on rent and utilities and mortgage interest and other things. So, but still, because of the furloughs that were going on, people were finding it very difficult to spend all of their PPP funds during the original 8-week period. So Congress extended the covered period to 24 weeks. So that should make it a lot easier to be able to spend all of your PPP funds. And they extended the date by which FTE and salary or wage reductions must be restored. So if you reduce the number of FTEs or you cut anybody's pay, you have now until December 31st, not June 30th, to restore the headcount and the wage reductions. Okay. They also added, if you look at the bottom here, they also added 2 new safe harbors, kind of get out of jail free cards that if you have a reduction in FTEs that otherwise would have led to a reduction in your loan forgiveness, now they have a safe harbor that says, well, if you try to rehire people who you had as employees as of February 15th of this year, or similarly qualified replacements, if you tried and you just couldn't do it, and you have to document all of this stuff, right? Then they're not going to ding you on your loan forgiveness. So you have to document that you had written offers to people that were employed as of February 15th, written offers at the same pay rate and same hours as before. You have to document if anybody turns you down, you have to document that, and then you have to document your attempt to find similarly qualified replacements. And if you do that and you don't refill a position that you laid somebody off, then you're not going to get dinged for that slot in your FTE calculation. Similarly, if you can document in good faith that you just couldn't get back to the same level of business as pre-COVID levels, so prior to February 15th, because of compliance with COVID restrictions like social distancing and the like, if you can document that you just couldn't get your business back up to that level and then therefore didn't need the same number of FTEs that you once had, then you're not going to get dinged on loan forgiveness. So they're really trying to help everybody have full forgiveness on their loans. Okay, there was a payroll cost requirement that the amount that you were applying for forgiveness for, hopefully the full amount of your PPP loan, 75% of those funds had to have been spent on payroll costs. Well, they've now reduced that requirement down to 60%. So at least 60% of your forgiveness amount has to be spent on payroll costs. Well, what makes up payroll costs? Salaries and wages, subject to a $100,000 annual rate limitation. So that's $1,923 per week, annualizes $100,000. And if you have $1,923 per week for an individual times the 24-week covered loan period, that's $46,154 per employee maximum. Owner employees maximum is not $46,154. The maximum for owner employees is the lesser of 2.5 months of what they got in 2019, or $20,833, which is 2.5 months at the $100,000 rate. You can also include in payroll costs health insurance, although not if you're an S corporation. You cannot include health insurance costs for owners. You can include health insurance costs for everybody else. And of course, you're only able to use the employer cost. So if you are withholding a portion of health insurance premiums from your employees' paychecks, you have to back that out of your forgiveness amount. You can include retirement benefits, and you can include state and local employer payroll taxes, which in Maryland is just your state unemployment tax. And that's probably going to be a very small number because by the time this PPP loan kicked in, nobody got their loans before April. So by April, most people had already reached their SUTA limit. The company had already maxed out on the SUTA. But if you had new employees and you have to start paying SUTA on them, it's a small amount, but you can include that in your forgiveness calculation. The Flexibility Act also changed the loan deferral period. Initially in the CARES Act, it was a period of not less than 6 months. Now they changed it to until the date on which the amount of forgiveness is remitted to the lender. Now, you don't have to submit, well, you can't really submit your forgiveness amount to the lender until the end of the covered period, although some guidance came out last week that says that you can. And it was a bit confusing, that guidance, because what it said anybody that applies for forgiveness early before the end of their covered loan period and had reductions in salaries or wages has to project those reductions out through the entire 24-week period. Okay, fair enough. But what it did not address is, how do you calculate the number of FTEs that you had in your covered loan period if you apply before the end of your covered loan period? So that part doesn't really make sense. Okay, so the deferral period now is the covered loan period, which is 24 weeks or through 12/31/20 if you take advantage of this extension now, right? It's the earlier of the end of 24 weeks or 12/31/20. So with this new extension, if anybody applies for a PPP loan and gets it on July 17th or later, your covered period is going to go beyond 12/31/20. But really, everything gets shut down on 12/31/20. So you have the end of your covered period of the loan plus 10 months after the last day of the covered period to apply for forgiveness. I'm not sure why anybody would want to wait 10 months. You know, if you've spent all of your PPP funds and, you know, they're on eligible costs, you probably want to get that application, forgiveness application, to your lender soon after the end of your covered period, so that you can rest assured that it's all been forgiven. The Flexibility Act also lifted a restriction on FICA deferral for PPP loan recipients. What the FICA deferral is, the CARES Act provided that from on wages paid from March 27th, the date of enactment of the CARES Act, through the end of 2020, employers could defer the employer portion of their FICA. And so that would be not forgiven. It's not a credit, but you would carry it as a liability, and 50% of it will be due on December 31st, 2021, and the balance will be due on December 31st, 2022. Now, initially in the CARES Act, anybody that got a PPP loan, once they got their forgiveness letter from the bank, they could not continue to take advantage of this FICA deferral. That's been lifted. Now it doesn't matter if you got a PPP loan or not, forgiven, not, it doesn't matter. Everybody can take advantage of this deferral of employer FICA for the balance of 2020. Okay, so those were the changes as a result of the PPP Flexibility Act. Now we're going to look at the loan forgiveness application form. This is, and they changed the form since they changed the rules, and they changed the covered period to 24 weeks. This was originally an 11-page document including instructions. Now the instructions are a separate document, and this is just the loan forgiveness application form. They've also created a short form, Form 3508EZ, which we'll get into briefly. Some companies will be able to use the 3508EZ. But either way, this is the top half of page 1 of the loan forgiveness application form. It's just general information, business name, address, employer ID number, things like that. But a few things I wanted to point out. It asks for the number of employees at the time of the loan application and the number of employees at the time of the forgiveness application. FTEs are a big part of the loan forgiveness application, but just not here. They're not looking for FTEs on page 1 here. They're looking for number of full-time and part-time employees. If you received an economic injury disaster loan advance, they would like to see that amount, and that would be right over here, and your EIDL application number. They want to know your covered period, the start date and the end date of your covered period. And if you use the alternative payroll covered period, which we'll talk about in a minute, they want to know the start date and end date of that period as well. And the last line in this general section is if you received a PPP loan in excess of $2 million, you're going to check this box down at the bottom here, because you're going to go into a special pile whereby your loan and your application form will be reviewed by SBA. Everybody over 2 million is going to be reviewed by SBA, and select other loans. We don't know what that means. We don't know what percentage. I would imagine that it would be skewed toward higher loan amounts, but I mean, anybody's loan could be picked for review by SBA. All right, so this is the covered period versus the alternative payroll covered period, or the APCP. The covered period of the loan is the 24-week period that begins on the day you receive your loan proceeds, okay? And you can use payroll paid or incurred during the 24-week covered period. So if you're a biweekly payroll company, there's going to be 12 pay dates during your covered period. The alternative payroll covered period, and this has kind of lost some of its appeal because since they extended the covered period from 8 weeks to 24 weeks. When it was 8 weeks, this alternative payroll covered period was a really good incentive for people to use, because you can start that period on the first day of the first pay period following the receipt of your PPP loan proceeds. So what that meant was, if you were bringing employees back and they weren't back on the day that you got your PPP loan, you didn't have to start using the payroll on the day that you got the PPP loan. You could wait a week or 2 weeks or however long it took until the first day of the new pay period after the day that you got your PPP loan. So presumably you would have more payroll costs than you otherwise would have, and you would have higher FTE counts. Again, now that it's 24 weeks, it's probably not going to matter. But you can elect to use either one. Okay, this is the bottom half of the loan forgiveness application form, page 1. It's divided into 3 sections. The first 4 lines are where you show your actual payroll and non-payroll costs. Again, what are payroll costs? Salaries and wages up to $100,000 annual rate, health insurance and retirement benefits, and employer state income taxes assessed on wages. That's your payroll cost. That's line 1. Lines 2, 3, and 4 are non-payroll costs, and they are business mortgage interest on real and personal property that was in place before February 15th of this year, business rent or lease payments on real and personal property in place before February 15th of this year, and business utility payments. What are utility payments? Electricity, gas, water, transportation, telephone, and internet services that were in place before February 15th, 2020. The middle part of this form is the calculation of the reduction in your loan forgiveness. So your maximum loan forgiveness is going to be the sum of lines 1 through 4, or the amount of your PPP loan, whichever is less. And of course, the sum of lines 1 through 4 cannot exceed the amount of your loan, because it's what you spent the loan on. So it can't exceed the amount of the loan, the sum of lines 1 through 4. But the middle section computes the reduction in maximum loan forgiveness as a result of reduction in salary and hourly wages or reduction in FTEs, provided you don't meet one of the several safe harbors that are available to you. And we're going to get into them shortly. And then the bottom part is the potential, it's actually the forgiveness amount. Lines 8 through 10 are the potential forgiveness amounts. Line 11 is the lesser of line 8, 9, and 10. So line 8 is your maximum forgiveness amount as modified by your reduction amount. Okay, so that's line 6 times line 7. Line 9 is the actual amount of your PPP loan, so that's easy. And line 10 is the payroll cost requirement, which is the amount that you spent on payroll costs, which is the number on line 1, divided by 60%. So you're going to list the amounts for lines 8, 9, and 10, and you're going to pick the smallest of those 3 and enter it on line 11 as your forgiveness amount. And we're going to go through a couple of examples of this right now. All right, so let's assume you got a $300,000 PPP loan and you spent $165,000 of it on payroll costs and $110,000 of it on non-payroll costs, right? $90,000 on rent and $20,000 on utilities. So you spent a total of $275,000 out of the $300,000. For this example, we're going to assume no reduction in salary and hourly wages and no reduction as a result of FTEs. So your modified total is $275,000 times 100%, okay, or 275. Your PPP loan amount we know was $300,000. So far your forgiveness amount is the lesser of those two, right? Again, they're not going to forgive more than you spent. And then line 10 is your payroll cost requirement, which is line 1, 165,000 divided by 60%, which happens to be 275,000, the total amount that you spent on eligible costs. So in other words, 275,000 is the amount when multiplied by 60% equals what you spent on payroll costs, or 165,000. So you're going to take the lesser of line 8, 9, or 10, which of course is 275,000, and you're going to have an unforgiven loan balance of 25,000, 300,000 minus 275. Okay. Now in the second example, same $300,000 PPP loan. This time you only spent $150,000 on payroll costs, and you spent the same $110,000 on non-payroll costs. So you spent a total of $260,000 out of the $300,000. So you would think that would leave you with a balance, loan balance of $40,000. However, if you go down to lines 8, 9, and 10, you spent $260,000 reduced by 0 for FTEs and salary and hourly wages. Your PPP loan amount was $300,000. So far your forgiveness amount would be $260,000. However, you only spent, your payroll cost requirement is only $250,000. It's the amount that you spent for payroll costs on line 1 divided by 60%, which is $250,000. In other words, 250,000 is the amount, the total amount by which 60% is 150, or what you spent on payroll costs. So you can see you did not, you can see up here, you didn't meet the 60% requirement. So you know already you're in trouble. And so only 250, that would be the lesser of lines 8, 9, and 10. Your forgiveness amount is $250,000 and your unforgiven loan principal is $50,000. So even though you spent only $15,000 less in example 2, your loan forgiveness amount dropped by $25,000 because you didn't meet the 60% requirement. Got it? Okay. This is page 2 of the 3508. It's reps and certs. You're going to have to initial every one of these things to, make sure so SBA knows that you read and understand them, and then you're going to have to sign the bottom. What are you certifying? Well, you're certifying that you're following all of the rules, that, you not only read the instructions and, are up on the law, but you actually read these certifications and you're initialing each one of them. And those rules are that you use the PPP funds only to pay eligible costs, that you've included all salary and wage and FTE reductions in your calculations, that your payroll costs are at least 60% of the forgiveness amount requested. You're not exceeding 2.5 months of 2019 compensation for any owner employee capped at $20,833. You're acknowledging that if you use the funds for any unauthorized purchases, there are civil and criminal fraud charges that could apply. You're certifying that you verified the accuracy and you submitted all of the required documentation. You understand that if you knowingly lie to obtain PPP forgiveness, you can be in a lot of trouble, up to 30 years in prison and $1 million fine. And that you're also certifying that the tax documents that you're submitting to the lender along with your forgiveness application are those that they're the actual ones that have been or will be filed. And you understand the SBA may request additional information from you down the road. And if you check the box for the FTE safe harbor relating to level of business activity, that is actually the truth. Okay, this is PPP Schedule A. The loan forgiveness application is divided into 3 sections. There's the first page that we just went through that actually calculates your loan forgiveness amount, but all of that information has to come from somewhere, right? You're going to have worksheets and spreadsheets that kind of funnel through this PPP Schedule A, and from Schedule A, you're going to get the numbers to put on page 1 of the forgiveness application form. So what does Schedule A summarize? Well, it summarizes all of the detail from the third part of the form, which is the PPP Schedule A worksheet. And so it will summarize total cash compensation paid during the covered period, average FTEs during the covered period, salary and wage reductions, amounts paid for health insurance, retirement plans, and state and local income taxes, compensation to owners. You're going to show your FTE reduction calculation, which is the average number of FTEs during your covered period versus your chosen reference period. So you're going to have to compute the number of FTEs, average number of FTEs for the period January 1, 2020 through February 29, 2020. And you're going to have to compute it for February 15, 2019 through June 30th, 2019. And you will choose the lesser of those 2 periods as your chosen reference period. And on the PPP Schedule A worksheets, which will flow to PPP Schedule A, you're going to look at the FTE safe harbors 1 and 2, which we touched on earlier and we will get back to shortly. Okay, so this is where most of the work is. It's the Schedule A worksheet. This is the full page. You can see there's Table 1 and Table 2. We're going to take a closer look at each of those. This is Schedule A worksheet Table 1. Now, a requirement for forgiveness is that anybody that you are claiming payroll for is someone whose principal residence is in the United States. So that's the first bullet point on Table 1 and Table 2. So that's a given. The second bullet point for Table 1 is anybody that received compensation from the borrower at an annualized rate of less than or equal to $100,000 for all pay periods in 2019, or who were not employed by the borrower at any point in 2019. So taken literally, what that means is if you have somebody making $70,000 a year and you, in 2019, and you paid them a $10,000 Christmas bonus last December, that $10,000 in that one pay period, if you annualize that, that is an annualized rate of greater than $100,000. So they don't meet this criteria of annualized rate of less than or equal to $100,000 for all pay periods in 2019. So that person would not go in Table 1, they would go to Table 2, which we will look at in a minute. So, I mean, we're reading that literally. I don't know that that's the intent of the law, but that is certainly the way the form reads, and wouldn't want to be the guy that says, well, we didn't do it that way. I know it says that, but we didn't think that's what you meant. So anybody who received pay in 2019, even for one pay period at an annualized rate greater than 100,000, they would fall to table 2. So table 1 also shows, I'm going to back up a slide here. So you list the employee's name, employee ID number, the cash compensation paid to them during the covered period, subject to the $100,000 limit, annual rate limit. And then for each person, you're going to compute their average FTE amount during the covered period, not to exceed 1.0 per person, and any salary or hourly wage reduction. So for FTEs, they are allowing you to use either of 2 different methods to compute FTEs. You can use the actual method, which is the average number of hours paid per week during the covered period, or the APCP, divided by 40, rounded to the nearest 10th, again, not to exceed 1.0. Or the simplified method, which you can use for employees who work 40 hours a week or more, they're automatically a 1. And for those that work less than 40 hours a week, they are automatically a 0.5. So there are reduction exceptions. So once you compute your FTEs for the covered period and you compare it to your chosen reference period, if there's a reduction, you can add back with no penalty anybody that meets any of these criteria, right? So if you have somebody who rejected a good faith written offer to return to work at the same hourly rate and the same hours as prior to the separation, if they turn you down, and you have to document that, of course, but you can add them back to your FTE count and not be penalized. Anybody who was fired for cause, you don't have to replace them for your FTE count. Anybody that voluntarily quit, you're not going to get dinged on your FTE count. And finally, anybody that voluntarily requested and received a reduction in hours, you can actually add the difference back up in your FTE calculation. You cannot add back those people if they were filled with new employees. So, if you fired somebody for cause and then you replace them with somebody else in that position, you can't count the replacement person and the person that got fired for cause, because that would be double counting. And, we're going to make this point throughout this session. Remember to please document everything contemporaneously, because you're going to have a hard time remembering all the circumstances if SBA comes in 5 years from now and looks at your loan. So make sure everything is documented as it happens. Okay, so this is PPP Schedule A Worksheet Table 2. And you can see, again, bullet point 1 is principal residence in the US. Bullet point 2 for Table 2, received compensation from the borrower at an annualized rate of more than 100,000 for any pay period in 2019. So that's that guy that got, the $10,000 bonus in that one pay period. That's any pay period in 2019, and would drop him down to Table 2. And the employees listed in Table 2 are not subject to the salary reduction rules. Okay, then there's the safe harbors. If you have a reduction in FTEs, the law says that the amount of loan forgiveness will be determined without regard to a reduction in the FTEs or reduction in salary if there's a reduction from February 15th to April 26th that is restored by December 31st. So it's okay to have a reduction, but if you restore it by December 31st, you're not going to have a corresponding reduction in loan forgiveness. Same goes for reduction in the salaries or wages of one or more employee. As long as it's restored by December 31st, you're not going to get dinged on your forgiveness. So what do you need to do to figure this out? Well, a lot, unfortunately. You have to compute the average number of FTEs between February 15th, 2020 and April 26th, 2020 Why April 26th? Because the law reads that the period that you're going to have to compute the average FTEs for is from February 15, 2020 to 30 days after enactment of the CARES Act. CARES Act was enacted on March 27th. 30 days later is April 26th. Then you're going to compute the total number of FTEs in the pay period that included February 15th, 2020. And you're going to compare those two FTE calculations. If there was no reduction from February 15th to the average of February 15th to April 26th, then there's no forgiveness penalty and you're done, okay? If there was a reduction, then you need to compute the total number of FTEs for each pay period through 12/31/20 to see if you got back up to 215 levels. And if at any time after April 26th, the FTE total is equal to or greater than the February 15th FTE total, then you've restored it and there's no forgiveness penalty. So that is a safe harbor. So these two new safe harbor rules that we alluded to earlier, these are a result of the Flexibility Act. So it says that the amount of loan forgiveness will be determined without a regard to a reduction in FTEs if an eligible recipient, borrower, in good faith is able to document an inability to rehire individuals who were employees of the recipient as of on February 15th, or similarly qualified employees for unfilled positions. So we made reference to this earlier. I just want to reemphasize that this is a safe harbor. If you really tried to get those people back and couldn't, and you really tried to get similarly qualified people to fill those positions and you couldn't, and you have the documentation to prove it, you're not going to get dinged on your loan forgiveness. And the other new one is that the inability to return to pre-February 15th levels of business activity due to HHS, CDC, or OSHA requirements relating to sanitation, social distancing, or other COVID-19 related safety issues. So if you are a gym or a spa or a restaurant, or possibly a doctor's office, and you can't get back to February 15th, pre-February 15th levels of business activity because of COVID-19 related safety issues, then you're not going to get dinged on your FTE count because you didn't need that number of FTEs to support a lower level of business. I have in parentheses, this will likely require clarification because we're not really sure what the measurement method is. Are you comparing December 2020 to December 2019? Are you comparing all of 2020 to all of 2019? We're not really sure, but it's just something to keep in mind that if it's an issue for you, you want to start documenting that. So all these FTE rules are very cumbersome, very confusing. We've put together a spreadsheet to help walk you through them. Not a spreadsheet, a flow chart. And there's not enough time in this presentation to go through the flow chart step by step, nor is there enough room on the screen. But if you want a copy of the flow chart to help walk you through all of the steps and the timing for FTE calculations in order to compute your forgiveness reduction, if any, please email Sarah Lands at the email address on your screen. Okay. The salary and hourly wage reduction, similar to the FTE reduction, if you have a reduction that is more than 25% of an employee's pay compared to the first quarter 2020, you're going to have a potential reduction in loan forgiveness. But similar to the FTE safe harbor, if you run through these calculations and you've restored your salary and wage levels by December 31st, then you won't get dinged on your loan forgiveness for that. I talked about 3508EZ a few minutes ago. This is the short form. Remember the 3 sections of page 1, that calculation of your loan forgiveness amount. That middle section dealt with reduction in FTEs and reduction in salaries and wages. If you didn't have that, or if you're self-employed or independent contractor, sole proprietor with no employees, you can use the 3508EZ. So the only difference between the 3508 and 3508EZ is the 3508, you have to go through all those FTE and salary reduction calculations. But if you know that doesn't apply to you, use the EZ. Okay. So how do we track all this stuff? You're going to need to track your payroll costs by employee during the covered period, or the APCP. You're going to do that, of course, with Excel spreadsheets supported by your payroll reports from your payroll processor. You're going to need to compute FTE counts as of or for each of these periods. And again, the flow chart will walk you through that as well. So you need to do it for January 1, 2020 to February 29, 2020, and February 15, 2019 through June 30th, 19. Those are your reference periods. You're going to pick the lesser of those 2 as your chosen reference period. You're going to have to compute the number of FTEs during your covered period, or APCP. And again, how do you apply for loan forgiveness before the end of the covered period if you haven't gotten to the end of the covered period and you don't know what your FTE count is? So you will need to compute FTEs during the covered period. You need to compute FTEs in the pay period that includes February 15th, 2020, and for the period February 15th to April 26th. And for all pay periods, provided you did have a reduction, you're going to have to compute it for all pay periods through 12/31/2020, unless or until the reduction is eliminated. And we're going to get into a strange caveat on that in a minute. You're also going to need to track mortgage interest paid on real and personal property. So, if you do have mortgage interest, that means you have a loan and you have a loan amortization schedule, which you're going to need to figure out how much interest was paid during the covered period. Any rent, real property or personal property, and utilities during the covered period. Utilities, this is similar to what we said about payroll earlier. It's utilities paid or incurred. So anything that you paid during the covered period, you can put that towards your forgiveness calculation. If let's say your covered period ends October 15th, okay, and you paid your September utility bill the first week of October, well, and then you paid your October utility bill the first week of November, you can put in for forgiveness for the period October 1 to October 15th. So say about half of your October utility bill, even though you didn't pay it during the covered period, those costs were incurred during the covered period. So there is a PPP forgiveness calculator. It's an Excel workbook, and it's at AICPA.org. That is the website for the American Institute of CPAs. And if you click on Paycheck Protection Program Resources, you will find a download button to download the Excel workbook, which will help you with the loan forgiveness calculation and all of this stuff that goes with it. And of course, we're certainly happy to help anybody with any questions you might have about loan forgiveness. If you want us to help you with the calculations, we can do it. If you want us to just check your calculations, we can do it. We don't want to leave anybody hanging out there. So what documents will you need to support your PPP loan forgiveness application? Well, obviously you're going to need your payroll service reports that support all of your payroll forgiveness calculations, tax forms for the periods that overlap your payroll covered period, receipts, canceled checks, account statements supporting your health insurance and retirement contributions claimed. All your FTE calculations, you're going to need that. And any support for non-payroll costs, again, mortgage interest, you're going to need amortization schedules. You're going to need invoices and receipts and canceled checks for payments that you made. And you're going to need proof that these agreements or services were in effect prior to February 15th, 2020. So if your covered period is from, let's say, May 1st through the middle of October, you're going to need your utility bills for anything that you paid from May 1st forward, but you're also going to need a bill with the same account number that includes the date of February 15th to prove that this service was in fact in effect as of February 15th of this year. We're getting there. Loan forgiveness timeframes. The borrower, you will complete the loan forgiveness application and send it to the lender with all the documentation required for loan forgiveness. Now, all of those things we went through on the previous slide, you're not going to need to send all that stuff in, but you're going to need to have it available in case SBA comes in. So, gather it, again, contemporaneously. So the borrower, you have up to 10 months after the end of the covered loan period to apply for loan forgiveness. But again, why anybody would wait 10 months? That just doesn't make sense. The lender, once you submit your forgiveness application to your lender, they'll have 60 days to review it and issue a decision on forgiveness to SBA. If they approve it in whole or in part, then SBA has 90 days to approve their decision and remit the forgiveness amount back to the lender. If it's denied, the lender has to notify you still within that initial 60-day time frame, and then you'll have 30 days after that to basically appeal to SBA and request them to review the forgiveness application. You have to retain all PPP documentation for 6 years. 6 years after the date the loan is either forgiven or repaid in full, whichever is later. So again, the importance of contemporaneous documentation. If SBA comes in 5 years from now, you're going to want to have all the answers already pre-documented. You're not going to want to be scrambling to figure stuff out. Why did where did this number come from? I mean, you can't do that. You got to have that all in a row right now and as you go through your covered period. Because, and this is a direct quote from the law, for a PPP loan of any size, SBA may undertake a review at any time in SBA's discretion. So we know that all loans over 2 million are going to be reviewed, but we don't know how many loans less than 2 million are going to be reviewed. But the fact is, for a loan of any size, SBA can come in at any time for any reason and look at your stuff. So very important. Document, document, document. A couple of things that are still in doubt. Well, we're still looking for a concise definition of owner-employee because there are certain rules that apply to owner-employees. This is the caveat now, the next one that I referred to a few minutes ago. There is a quirky contradiction in the forgiveness application as it relates to FTEs. So the instructions and the law are consistent where they say if you have a reduction in FTEs that is restored on or before, actually no later than December 31st, then your loan forgiveness will be computed without regard to reduction in FTEs. However, when you go through the calculation on page 4, step 4 of the forgiveness application, it asks for the number of FTEs as of the earlier of December 31st, 2020, or the date of the forgiveness application. Well, what that says to me is if you had a reduction and you restored it by, say, July 31st, and then you dropped again, and now it's October and you're less than where you were in July, and you're applying for your loan forgiveness, you're going to have to, it's asking for the number of FTEs as of the loan application. But that's not what the law says, and that's not even what the instructions to the form say. So we're hoping to get some guidance clarifying that. Utilities, we said earlier, utilities include gas, electric, water, transportation, telephone, and internet services in place prior to February 15, 2020. Transportation, what is that? We don't know because nobody ever told us. So there was one example in some guidance that was issued early on that said if a Schedule C filer uses their car for business, then the gas they use for business miles are considered transportation costs. Well, really, is that it? We don't know. The next one is, can you use PPP for proceeds to fund your whole 2019 401k match during the covered period? Again, I don't think that's the intent of the law to use PPP funds in 2020 for a 2020 covered period to fund your 2019 match that you accrued at the end of the year but didn't pay until 2020. But there's nothing that says you can't do that. But with the extension to 24 weeks, my hope is that you won't need to mess with this bullet point or the transportation bullet point, that you'll have enough payroll in the 24 weeks that you'll be able to use all of your PPP funds and easily hit the 60% payroll requirement. Another thing that's in doubt is after forgiveness, if you still have an unforgiven loan balance, can you use the remaining funds however you want? Nothing says you can or you can't, but we would recommend, in the unlikely event that you do have an unforgiven loan balance, that you continue using those funds for the stated purposes, right? Payroll, rent, utilities, etc., and to make payments on your PPP loan balance. Okay, takeaways from the presentation. Certainly, you should be maintaining an Excel spreadsheet that starts with your PPP loan proceeds and shows the uses of the funds as you go along with a running balance. We recommend keeping your PPP funds in a separate bank account. That is not required by law, but we are recommending it, and that way you can always reconcile the amount in your bank account to your Excel spreadsheet where you're maintaining your running balance. We certainly recommend doing your FTE calculations for prior periods now because they are time consuming, and while you're in this 24-week covered period, why not use that time to compute your FTE calculations for all of those measurement periods that we went through earlier. Assume your loan will be reviewed by SBA. Be prepared to defend everything. And by that I mean document all of your PPP related actions throughout the covered period and beyond. Not just your actions, but the decisions that led to those actions and the information that you use that led to those decisions and the assumptions that support that information, things like memos, minutes to meetings, cash flow projections, anything that will support your position for why you acted the way you did, including why you applied for the PPP loan in the first place. Because if SBA comes in, they're not just going to be looking at your loan forgiveness application, they're going to be looking at, was there a need to get the PPP in the first place? So certainly document everything, and remember, good faith and reasonableness will rule. When SBA comes in, they're going to be looking at everything through that lens. So, is it is it reasonable to pay people hazard bonuses because of COVID-19? Well, maybe, yeah. So, you know, to incentivize them to come into the office and you know, risk getting coronavirus. I don't see that being a good faith problem. What I do see being a good faith problem is paying out big bonuses near the end of the 24-week period because you wanted to use up all the funds. That's not good faith and it's not reasonable. So keep good faith and reasonableness in mind. These are some resources that we recommend. Treasury.gov has, I go to Treasury.gov every single day to check for new guidance, either the passage or the issuance of new interim final rulings, additions of frequently asked questions. There's all kinds of information on Treasury.gov. If you click, there's a red COVID-19 banner near the top. If you click on that, it takes you right to all of that information. The SBA website, same thing, a lot of information there. AICPA.org, I referenced that earlier. The PPP loan forgiveness calculator is there. There's also a lot of frequently asked questions on there. That's a good source of information. The Maryland Business Relief Wizard, you can find some local funding opportunities there. And of course, our website, katzabosch.com, we have a COVID-19 resource center that has a lot of good information on that as well. Whoops, there we go. Okay, that's it for me. And now we will field any questions.
All right, thank you so much, Fred. I'm going to go ahead and get us started with pre-submitted questions, and then we will pivot over to those that have been submitted via the chat box. So if you haven't submitted your question yet, please feel free to go ahead and submit it now. The first question that we have is, does line 3 on the easy form, business rent or lease payments, include lease payments on medical equipment?
Yes. The lease payments apply to real property and personal property, and so the medical equipment would be considered personal property.
Okay. If a PPP loan was received before June 5th, what are the pros and cons for submitting the forgiveness application before the end of the 24 weeks covered period?
If a loan was, okay, before June 5th, right. So if you got it before June 5th, you can elect, I mean, everybody got moved to a 24-week period, okay? But if you got your loan before June 5th, you can elect to use the 8-week covered period. A con to using the 8-week covered period is you may not have enough time, you may not have had enough time to spend all of your PPP funds on eligible costs and or meet the 60% payroll requirement in 8 weeks. And if that's the case, that's a con because you would end up having to pay part of your PPP loan back. You'd have an unforgiven loan balance. So you would certainly want to go to the 24-week period so that you can exhaust those funds and get full forgiveness.
Okay, thank you. For HHS stimulus funds, are professional scrubs considered PPE?
I think they would be. I've had a lot of practices switch to uniforms so that they can change their clothes when they come to work and when they leave. So yes, I think that absolutely would be part of the COVID preparation.
Some employees quit at this practice due to concerns for the COVID-19 risk, and then they subsequently hired new employees that started at a lower wage. So how should they count the 75% wage reduction rule?
So the 75% rule applies to the same employees. So you wouldn't compare the replacement employee's pay to the person they replaced. Make sense?
Yes. Okay, so for the couple of people who have contacted us asking if we'll send out a PDF, we will. We'll also post the recording of this. I know we've gone through a lot of information today. Our next question asks, if you are not deferring payment of FICA in each payroll issued, does it matter about the FICA deferment?
No, you know, that's a matter of choice. And if your cash flow allows you to pay the FICA currently with each payroll, then why not? Because you're gonna have to pay it eventually. So this is really to help people that are having severe cash flow problems, so they don't have to pay that until half December 31st, 2021 and half December 31st, 2022. But it's not going away. So if you feel like you can pay it without creating a cash crunch, then you're just paying liability now instead of paying it later.
Since the voluntary request to reduce hours was not implied until after June, will employers be required to provide documentation that an employee requested to reduce hours for months of April and May?
I'm sorry. Can you repeat that, Carissa?
Sure. Since the voluntary request to reduce hours was not implied until after June.
Was not implied? I'm sorry, implied?
Yeah, it says implied. All right, so the individual who submitted that question, if you have a clarification for it, feel free to go ahead and submit it now, and we'll circle back to your question. So this individual submitted their information based off of 2019 FTE, and they have 3 to 4 people that either retired, 3 to 4 people that retired, so their FTE numbers are going to be different. So how will that impact their loan forgiveness?
Okay, if I'm understanding the question, it sounds like they are using as their chosen reference period February 15th, 2019 to June 30th, 2019. Okay, and it sounds to me like they have since had several people retire. So they have a reduction in FTEs as a result of several retirements. If I'm understanding that question correctly, then retirement would fall under voluntarily quit, and they will not get dinged on their loan forgiveness for people that left voluntarily.
Okay. So where can practices find Form 3508?
You can find it right on either SBA's website or treasury.gov. I believe it's even on the Katz Abosch website. Or send me an email and I'll send it to you.
Okay, great. We'll be sure to include that in the post-event email for practices as well. Save you all a little time. So the next question is, I got a PPE loan on April 24th to keep my practice open for 8 weeks. I spent the 8 weeks closing my medical practice. It officially closed on June 26th. Can my loan be forgiven?
I'm sorry, Carissa, you broke up there for a minute. Can you repeat the question?
Sure. I got a PPP loan on April 24th to keep my practice open for 8 weeks. I spent that 8 weeks closing my medical practice. It officially closed on June 26th. Can my loan be forgiven?
Well, the loan can only be forgiven if, to the extent that you spent PPP funds on eligible costs. So, you know, again, the maximum amount of loan forgiveness is going to be the lesser of the loan amount, the amount that you spent on eligible costs reduced by your FTE and salary and wage reductions, or 60%, or your payroll cost divided by 60%. So I guess I don't have all the information necessary to give a solid answer on that. What I would say, you know, for example, if you if you got a PPP loan of $200,000 and, because you were shutting down your practice in that 8-week period, you only spent $50,000 on eligible costs. Well, that's the maximum that you're going to be able to get forgiven. And it may not even be that high. You have to go through the calculations.
Okay. For a 75% wage reduction, new hires at a lower wage versus an employee who quit. Oh, all right. So the person who submitted this, let me just let me know if I'm not asking the question properly. It looks like there was a 75% wage reduction, and then there were new hires at a lower wage, and then you also had some employees that quit. Are you wondering for each category how you would file for forgiveness? Let us know.
So again, it sounds like this might be similar to the previous or a previous question. You're not comparing one employee to another. You're not comparing a replacement employee to their predecessor. Everybody stands alone.
Okay. So the next question says, I have already submitted my documents to my lender on the 3508 form, which the lender sent to me. Since the calculation requirements for reduction have changed from 0.75 to 0.6, do I need to submit an updated form?
So the requirement for 0.75 to 0.6 relates to payroll costs as a percentage of total amount applied for forgiveness. So if you met the 0.75 before, well, then you certainly meet the 0.6 now.
Okay, thank you. So this question says, my office is on track to spend 100% of our PPP loan on payroll costs. In this case, are we required to also report our additional non-payroll costs on the SBA forgiveness application?
No. You can, remember the sum of lines 1 through 4 should not exceed the total amount of your PPP loan, because it's asking, what did you spend your PPP proceeds on? Well, if it exceeds, if lines 1 through 4, the sum of lines 1 through 4 exceeds the amount of your PPP loan, then you're including other funds in your calculation, which is incorrect. So you can just, if you used 100% of your PPP funds on payroll costs, then leave lines 2, 3, and 4 blank.
Okay. Can life and disability insurance be paid for by the employer for the employees be included in the payroll calculations the same way health insurance is?
No. Health insurance includes health, dental, and vision. Short and long-term disability, life insurance, accidental death and dismemberment, no, those are not health insurance costs.
Please explain again when you must begin your alternative coverage period. Does it still begin the first payroll period after you receive the loan?
Right, so really I think the only reason to use the alternative payroll covered period, or maybe the best reason, is for ease of documentation, because you can start, instead of starting on the day that you got your loan, you can start calculating your payroll costs beginning on the first day of the first pay period after you received your PPP loan. And that first day of the first pay period, might not be for a week or a week and a half after the date that you got your PPP loan proceeds. One thing I do want to point out, and it's in the slides, but I don't think I pointed it out as I went through that. That alternative payroll covered period is only an option available to companies that have biweekly payroll or more frequent. So in essence, biweekly or weekly. If you pay semi-monthly or monthly payroll, the APCP is not an option for you.
Okay, and then our final question is, what's the advantage to reporting on an 8-week period versus a 24-week?
This is similar to an earlier question. There's no real advantage other than if you did spend all of your PPP funds on eligible costs in the 8-week period, and you either didn't have a reduction in FTEs or salaries and wages, or you did and you've already restored them and met the safe harbor, and you don't have to wait until December 31st to find out, well, then it wouldn't hurt to file and elect to use the 8-week period. But I would say if you didn't use all of your PPP funds in the 8-week period, and I know most companies just were not able to do that, it would be a rare instance where it would be to your benefit to use the 8-week period and have an unforgiven loan balance than to use the 24-week extended cover period and not have a loan to pay back. Whoops, you're muted.
Sorry about that.
Yeah.
All right, so that brings us to the end of our questions. If you do have additional ones or we didn't totally cover the question that you asked, please do let us know. We're happy to get it answered. Just shoot us an email in response to that post-event email. So I just want to say thank you to everybody who joined us today. We will make this webinar available online via our YouTube channel. It'll also be published onto our website in our digital learning library, which is under our member benefits section of the website. So there are a couple things that I just wanted to remind everyone of. The first is that MedChi continues to coordinate all clinician calls with Dr. Howard Haft of the Maryland Department of Health on COVID-19, but the schedule has changed. So it's going to be twice a week, every Monday and Wednesday at 5 p.m. going forward. So if you'd like to register for those calls, please visit us at montgomerymedicine.org. And then I also wanted to draw your attention to an upcoming program that will be next week. It's from the American College of Medical Toxicology. It'll be at 3 p.m. next Wednesday, and it's a discussion on developing a vaccine and a vaccination strategy. So if that would be interesting to your practice, then please visit us online at montgomerymedicine.org and click on our community calendar to see that event and register for it. So I'd just like to say thank you one more time to our wonderful speakers who joined us and provided such great comprehensive information. We really do appreciate it. And thank you to everybody who dialed in.
Thank you.
Thank you.